Hi, welcome to Caregiver Cast. I'm Mary Elaine Petrucci, your host. My guest today is Tanya Millar, who will be talking to us about insurance that can be used as financial planning and retirement tools. Before I formally introduce Tanya, I'm just going to give you some background information about her. Tanya worked as an advanced care paramedic for 13 years. During that time, she discovered she loved making a significant difference in people's lives. While she was positively impacting other people's lives, she wasn't being proactive about her financial future. When Tanya began to review her personal finances, she became frustrated and confused by the financial industry. After educating herself and protecting her family, it was time to use her knowledge to help other families. 3.5 years ago, Tanya moved into the financial industry. She helps other families and individuals be proactive about their financial future. Tanya helps other families and individuals by providing financial education so they aren't frustrated and confused. The number one stressor for most families and individuals is finances. Her mission is to reduce that stress. And for her and her colleagues, she has this positive outlook. Perhaps we can prevent a trip to the emergency room in the back of an ambulance. So she feels like one less patient for her friends still working in emergency services might equal rest for her colleagues. Welcome to Caregiver Cast. Tanya, how are you?
I'm great. Thanks for having me today.
Most definitely. We're going to be talking about insurance, and I'll just let the caregivers know that you are based in Canada, but these are still ways that they can implement insurance here in the States as well. So could you tell us a little bit more about your emergency medical services background and your pivot to insurance?
Yeah, absolutely. And to be honest, it's kind of a crazy pivot if you think about it. You know, you're going from the medical field where you're treating people medically, you know, in crisis, like you had mentioned. I fell into the medical industry and it was phenomenal. I loved helping people in crisis. But what I found over time is that a lot of the times what ended up happening is they would have an assault or a domestic or something like that, or a heart attack. And as I got talking to my patient, what I found over time is that finances is obviously one of the biggest things out there. One of our biggest stressors, of course. And so being in the EMS industry, we are worked very, very hard. And I don't care if you're in the States, I don't care if you're in Canada, Alberta, wherever you are, that system is strained. And so what ended up happening is I have two little boys. One is 7 and one is 9. And I wasn't able to be the mom I wanted to be. Now, there's a lot of practitioners out there that are, and they're fabulous at it. And I give kudos to you guys because I just wasn't able to do it. I wasn't home putting them into bed. I was out helping other people constantly, and I was missing out on their soccer games and things like that. And that's important to me. So what ended up happening is in, I think it was 2017, I ended up getting really burnt out. And unfortunately, but fortunately, and I say it like that because it turned out to be the best thing that's happened to me, even though it's the hardest thing that's ever happened to me, is I got diagnosed with PTSD early January 2018. Now, what happens with that is in our Alberta, Canada, what they ended up doing is taking me out of the industry. So just getting me out of the industry all the time. And at that time, an opportunity in a firm was presented to me. And I got to be honest with you, Marianne, I was like, I'm never going to be a financial advisor ever, ever, ever. You know what? I was so confused with the industry. And as you mentioned, I was so frustrated with them. I thought I had everything in place. Me and my husband, honestly, we had 2 advisors from other companies. And it's not that these companies are bad, but nobody sat down with me after I was 20 years old. So I had this RSP, and now this will be different in the States, but just take it for the grain of salt. If you have a statement and you didn't know how to read it, and you assume that that person took care of all your needs, which is what I did, another person came and actually took 20 minutes with me and actually educated me on what it was invested in and what it was doing. And it turns out mine was doing probably about 10% less than what it should have been for the last 21 years.
Wow.
So when you ask me a pivot to insurance and investments, I got out of the EMS industry, got better, wanted to find a way to have flexibility so I could be there for my family a lot more.
Mm-hmm.
And like I mentioned, I did not like the financial industry whatsoever. It was not a dream of mine. Sitting in a chair did not, make me excited.
Mm-hmm.
But what I found is the significant way that they helped my family. I was like, if I would have known this 20 years ago, I would have been a lot closer to my financial independence number, and I'd be a lot closer to being able to provide for my parents, provide for my kids, provide for myself, and maybe not have to work as long.
Mm-hmm.
And now I'm in that industry, and to be honest, the amount of significance that I had in people's lives is just, it is so amazing. It really is.
I'm impressed that you made that big leap, and I want to give kudos to you and all the EMS workers out in the field, because I know it's a very challenging position to be in. And I'm sorry to hear about your burnout. Caregivers face that too on a daily basis. So this is a great way to introduce you to my audience. So how do you go about assessing a potential client's needs?
Sure, absolutely. So the biggest thing is when I asked this lady to come over and help us, and this will give you an example, is okay, so a lot of people in this industry, basically I don't know if anybody's ever felt this way, and let me know if you do, but somebody comes in, they share a bunch of information that's really confusing, and a lot of times I'm not really sure what it is, but it sounds really good.
Mm-hmm.
And then you sign the paper, and then you take all this paperwork home, and that person's happy. And then you're like, okay, I did some adulting today, is what I call it. And you feel great about yourself because you're taking care of yourself, whether it be insurance, investments. And then you get home and you stuff it into whatever it is that you do. Maybe it's a shoe box, or, your whatever. And then you forget about it. And then if somebody actually asks you, hey, do you have insurance, or how long is it for, or what are your investments in? Anybody out there have no idea? Because I know that was me. So what we do is we do a holistic approach, which is amazing. We sit down and we assess the potential client needs by doing an analysis. We do analyzing. Sorry, I can't get the word out today.
It's okay.
We analyze their needs by basically we sit down and figure out their financial independence number. So what that is a GPS to your retirement, how you want your retirement to look. Okay.
Great.
So what does that mean? We're going to sit down. We're going to take a look at, we're going to help you budget. And I'm not going to be like, oh no, you can't have that gym membership anymore. It's too expensive. But we're definitely going to take a look at it. Like you said, your caregivers, we're going to take a look at it and see where we can find money within the money. We do the budgeting. We figure out your assets, your liabilities. What is your net worth? What are you actually worth on paper?
Mm-hmm.
And then we figure out, and this is my favorite part, what do you want? Right?
That's a great question. I know we all want a fantastic retirement and being carefree, but we've really failed to plan for that retirement.
Yeah. And you want to make sure, like for a lot of your listeners today, they're trying to look after their parents or help their parents out financially, or maybe their parents are living with them and they're looking after them medically, or, working full time, and plus your kids, or maybe they're young, maybe they're a little bit older, but either way, you've got a lot of responsibilities. So if I sit down with a client like that, my first thing is going to be like, okay, what do you want? And what do we need to make sure that you have? Okay. And then we back engineer a plan on, now, how do I get you there? And what work do you and I have to do?
Fantastic. I like that individualized approach. So how does insurance then add to a person's portfolio for present and retirement needs? Yeah,
absolutely. So, insurance I will let you guys know that when the lady from the company came and sat down with me from the firm, she actually sat down with me. And before she sat down with me, I said, whatever you do, don't come to my house and sell me more insurance. I'm going to ask you to leave. Now, please keep in mind, that wasn't me right now. That was burnt out Tanya at that time. But has anybody been sold insurance and everybody wants to sell you insurance and you don't know what it is?
Right, exactly.
I've heard a lot of my clients say, why do I need that much? Right. And once I actually break it down into what you want to take care of, they're like, oh, okay, maybe I need a little bit more, or you know what, maybe we'll do this for now and then we'll advance it later. So how does insurance add to a person's portfolio? Honestly, you guys, if you think about a financial house, okay, let's say, for example, we're going to build a house. Now, I'm not very, hands-on with construction or anything. So if anybody's out there listening and they're like, this is not how you do it, don't judge me. But what is the first thing that you need in your house to make it solid? You need a foundation, don't you? Without that foundation, yeah, the house is going to fall over if like the Three Little Pigs kind of story, right?
Right.
So the most important thing in a financial house is your foundation, and that's your insurance. Why is that? Because let's say, for example, you've got lots of money in your investments, whatever category it might be, it's making money, you're happy, but all of a sudden somebody gets sick. Or maybe there's, the breadwinner out there that's working and he or she is the only one that makes money and the other one stays home, and God bless the person that stays home and looks after everybody. And God bless the one that's out there working as well. But let's say, for example, that was taken away. They're going to blow through their savings just to try to live. I'll give you an example of this. I met a lady the other day. She and her husband were married. They were young. He was 32. Okay. They had 3 kids. Mom decided to stay at home. And why was that? Because honestly, it didn't make sense for her to go back to work, because a lot of people, I don't know if anybody's been in this position, because I know myself, but you don't make enough money to pay the daycare.
Exactly.
So she stayed home and she had 3 kids. Her husband passed away at the age of 32. Now, talk about unexpected, right?
Right.
So here she is, a stay-home mom in this scenario. She hasn't worked for about 4 years because they have the 3 kids. So do you think she can pay for the house herself? Do you think she can, has the credit rating to get anything? No. So what ended up happening is, to be honest, because he didn't have any insurance in place, they thought they would get it to it later. Anybody ever thought that?
Yes.
Yeah. She's like, I got my hand up. Yeah. I'll do it when the truck gets paid off. I'll do it when the house gets paid off. I'll do it when whatever. What ended up happening to this poor family is this lady told me she sold her house on the telephone within a month and moved her family into another area. And it took them a long time to rebuild. So when you ask me why insurance is important, it's important for you now. If something was to happen tomorrow, guys, we're not expecting it. It can just happen.
Yep, there's always an unexpected emergency, a fall, a sudden death. Yes. And
it doesn't matter what age, being in the medical industry for so long, I've transported brand new babies. I've delivered babies. I've transported, 100-year-olds, which, by the way, some of those are very fun.
Yeah, I'm sure they are. Yeah.
Right. But like all ages and everything. So.
Okay. And so what are some of the downfalls people should be aware of when purchasing insurance, and what things should they be looking for? So both of those questions.
I think overall, the biggest thing to look for is know what it is that you need to be covered for. So we want to make sure that your final expenses are taken care of, right? So, and again, costs will be different amongst, the countries, but overall it takes about $50,000 for a funeral. And that's not a fancy one. So this is, I'll give you an example. My father passed away in December 2020 unexpectedly. So this can happen to everybody. If it can happen to my hero, it can happen to your hero, or maybe even yourself. But the biggest thing about that is, with 2020, we weren't able to have a proper burial and a funeral. And the amount that his cost, I now am like, yeah, you need at least about $50,000. That is not a big fancy funeral. Okay?
Wow. I didn't realize
Again,
it was so expensive. Is it just
and
like the casket and not everything else, or?
well, and again, this is specific to Alberta, Canada, because that's where my experience comes in on a personal level only. But you know, even to my dad was cremated, and even to cremate him, the amount to cremate him was crazy. They actually, and in his scenario, we had to buy urine, right? And we, of
Yes.
course, you right, and now you got to think about it. And this is what I want you guys to think about the most: is you're heartbroken. So when you're
Mhm.
making these decisions, they are not easy.
They're
at all.
not. That's what I'm glad you're bringing that point up, because I want caregivers to be more proactive, like you're suggesting.
Yeah. So what you want to do is you want to make sure that you're thinking about this stuff early. And yes, there's going to be some hard conversations about what paperwork needs to be in place and how do you want your life to look like at the end as well. Power of attorneys, you know, lawyers, you're going to want all of that stuff in place, because I know when you're sitting there and your heart is completely broken, you want the best for that person that passed away, and the funeral homes know this, and I mean they're a company. I'm not bashing them at all. They're a company. They need to make money, so they're going to show you the nicest one. They're going to show you the average one, but the amount that we paid was outrageous. So
Wow.
and again, you guys have to remember there's inflation. So again, these guys have to make money, and it's not that there's anything wrong with that. It's just you need to be mentally and emotionally ready. And if you make the decisions now with your loved one, get that insurance place, get that power of attorney, get that lawyer in place, know who's going to look after when they, you know, neurologically can't make any more decisions. Like those types of things. Once those are in place, what do you want to happen if you go into cardiac arrest? Let's have that on a piece of paper, right? That's been seen by a lawyer and has signed off on it. Who do you want to take care of you? Those things need to be in place before your heart is broken, because they become a lot harder after.
Wow. Thank you very much for sharing that experience. I know it's really hard when those particular pieces like your insurance, your legal issues and everything and final expenses aren't taken care of. It is a very traumatic time to go through and make those decisions, because you're in crisis.
Yeah. And the three things that you guys want to look for when you're looking at the amount of insurance, and this is something that we always say, is 10 to 20 times the amount of your income, your annual income. So we're looking at that amount. Okay. And the reason why that is we want final expenses, like we mentioned. And I mean, if there's a little bit more, that's okay. you can handle a little bit more money. You also want to make sure all your debt is paid off. So you don't want a house payment after, you don't want your cars you want all your debt paid off. And then generally speaking, most people want that replacing of income when their spouse passes away, or whoever it is that's bringing that income in. So usually I recommend that we go ahead and put that leftover amount into a portfolio that can make you about 6% at least, a very conservative portfolio. And then we set it up so you have that income coming in so you can live the way that you were living before that person passed away.
Oh my gosh, great advice. So are there specific things that people or caregivers should look for when purchasing insurance? I mean, do they do whole life or term life or however?
Yeah, everybody hears these terms. I know I heard these terms and I was like, I don't know. So here's where we're at today. Okay, so there's term insurance. Now what term insurance is I like to say it's like renting insurance. Okay, it's like renting an apartment. It's usually cheaper up front. So it's more cost efficient when we're younger, right? We don't want to pay as much, but we get a lot of coverage as well at a cheaper rate. The thing is that generally speaking, and again, it's different with every company out there, but it ends. So a term insurance will pay out till, again, hypothetically between 71 and 80. Okay, some companies are different. So after that point, you don't want to be, 71 years old and now going to buy permanent insurance. Permanent insurance is like buying your own house. So it's permanent, you have it forever. Now, the key thing here is you've heard of whole life, and there's different types of permanent insurance. So there's non-participating life insurance, whole life insurance. And what that is that's permanent insurance, and it doesn't have a value, a cash value inside of it. It's just insurance for life. And to be honest, if you're younger and you're like thinking about this, do it while you're younger, because permanent insurance, of course, gets more costly as we have more health issues, as we grow up even more.
Mhm.
Okay. Universal life and whole life participating permanent insurance, those are really great when you're younger as well, and when you're older, but they have a cash value. So what does that mean? That means, guys, you have an investment and insurance. You're paying one premium a month, and part of it's going to your insurance and part of it is going to your investment. Now, the best thing is if you get the right one, you sit down with an advisor and they tell you some, specifics about it. You can get it so that when you're 65, you no longer have to pay for that insurance and you still have that investment inside of it. So that's another option, but term is more like cost appropriate for a lot of us. If you're living paycheck to paycheck, term insurance will cover you, and then you can get some permanent.
Okay, fantastic. So what's your advice then about different insurance policies? You've given us a little bit for financial planning and retirement tools. Is there anything else that caregivers should be looking for?
Yeah. So actually, if any of these caregivers are looking after, let's say, young children as well, okay, so maybe we've got our parents, maybe we've got our children, but a lot of people tend to forget about their children when it comes to insurance and investments. Like again, a lot of us are living paycheck to paycheck. So what happens when we're living paycheck to paycheck? We may not have, we're like, okay, again, the house will get paid off. We'll buy a different one. We'll do this. And then I'll get to that, savings plan for my child.
Right.
Or they don't think about the insurance for their child as well, because our kids are invincible. That's what we think. And they're truly not. So a couple different areas I would make sure that, keep in mind, and don't put yourself broke. Make sure you can afford it. That's number one.
Okay.
Number two is if you have a young child, it doesn't matter if they just have to be over 20 days old. Make sure that you get insurance in place, and a whole life, or actually universal life participating, is a really great one as well, because you're already got an investment inside. So when that kid goes to school, you still have that. The second thing is if we put insurance on our kids when they're young, they're healthy.
Oh, most definitely.
So they are guaranteed, if you're a mom or a dad or whatever, and you've got your kid already insured, if something does happen, now you're guaranteed to keep them insured throughout their life. They're not, 20 years old, had a heart attack, which has happened when I was in my career. They're not 20 years old, had a heart attack, and now they can't find insurance. Right. Exactly. So my suggestion would be that. And then another thing, guys, is make sure you have disability insurance. We all think we're invincible as well, and it's not going to happen to me. Anybody thought that before? Yeah. Well, guess what? It happens to you, and now you're behind the 8 ball per se, because you're the breadwinner, or you're working hard and you need to look after your parents, your kids, or whatever it is you're doing. Maybe you're doing it all. If you don't have something coming in, that's when you start going through your debt, and you start going through your savings, and you get into debt. Critical illness is a major one that's close to my heart. My friend's 3-year-old daughter had cancer. She fought it. She's cancer-free now.
Yes, great.
But if that covers you in a critical illness, now that's going to pay you out. That's a living benefit. So you don't have to wait till you pass away. That's money that can help you while you're alive and going through something. So those are the biggest ones that I'd make sure that you take a look at. Make sure that you have your family insured. Again, don't go broke doing this. Just make sure that you work with someone that actually knows what they're talking about. And then that way, make sure your parents are insured, make sure your kids are insured, make sure you're insured with what you can. And then that makes that house, that solid foundation, even stronger. So nobody's blowing your foundation over.
Wow. A lot of great information for us to really think about, Tanya. So thank you for being here today and explaining all that. I know for me, my parents, did these variable annuities and everything else. And so it's just, I'm glad that you mentioned that you need to start doing this when your child is like 20 days old, because like you said, we're never gifted more than the day that we have. So yes, being planned for like your children, yourself, your final expenses, and how you can plan for your retirement. All of that is great advice. Thank you so much for being here today. You've given our listeners great information. Thank you.
Thank you so much for having me. I hope somebody got some value out of that.
Oh, definitely. I think everything that you mentioned really, I like that analogy of the three pigs and having a strong foundation. Yes, great analogy. Thank you.
Thank you.